Good morning. This is Ron Brown. It is November 27th. This is Sunday morning. I'm back from a few days away, and I'm going to put out a little market report. I'm putting it under Power Techniques with HGSI because this is another power technique, but this is also a way where you can analyze the market. So let's get started. Standard risk disclaimer. All trading strategies are used at your own risk. If you don't have HGS Investor, you should. Just go to the site highgrowthstock.com and get the trial. You can try it for 30 days without entering a credit card. Now, I'm using files from my Insider Club. You can get HGSI without being an Insider Club member, but if you want to use my files and my techniques, you should join. It's $200 a year, $25 a month. Anyway, I'm going to look at the preferences, show you how I set up my scanning. I use a relative start date from Friday of this week. I go back 2 years rather than 1 year, so I use 104 weeks. I use the default internal filter. And I use market value weighting rather than equal dollar weighting because it puts more emphasis on the larger, higher capitalization stocks. So those are the parameters that are applied during the updating process that you do every day. Now what I'm going to do is I'm going to click into my designer. Like I said, these are files that I have in my Insider Club. First of all, I'm going to go to folder number 1, Major Markets Plus, which includes some ETFs, but I eliminate most of the ETFs by using this view right here. If I want the same view with ETFs, I go down here, but I usually use this one just to isolate these. My primary index for analysis is the NASDAQ Composite. I'll bring it up, and then I will click on the quick pick, and then I'll go up to market charts. I just added a circle here so it's a little easier to find. I'll click on view number 1, and I'm using the NASDAQ Composite, as you can see. Let's make this full screen and see what we can figure out here. I'm going to add an arrow here. I'm going over here to the left side of the screen. You can see the market is still well off of its 52-week high and down, but it was up 1.1% for the week. This is beginning Monday morning. It closed at 36.2% of its daily range. Both bongos are positive. These are relative strength indicators. The fan is still down. I'll show you the fan in another chart, and the volume was really low because of the shortened trading day and the long holiday weekend. But that did generate I have to click over here to be on that spot. No supply, a sign of strength. You can see, I'll take the crosshair off so you can see it better. This dot is here. This is an inside day. With the lack of volume, you're going to the candle formed in this range and has generated a no supply. Now this is from Wednesday. It was a pretty good volume day. This is the information down here. If I use the alternate I key, it brings this window up, and now I can scroll down here, and this information here, advancing versus declining stocks, corresponds to this window. Advancing volume versus declining volume corresponds to this window. And the new highs versus new lows corresponds to this window. And then the ARMS index corresponds to this window. That information is here. The volume is also listed over here. So it was a low volume day, as we would expect, but there was not a lot of movement, not a lot of selling pressure, which generated the no supply. Now, I'm going to bring this quick pick up, and I'm going to move down to the next view. Now, I want you to delete my charts and reinstall them, or when you do the add-on, they're going to reinstall them. This chart's going to be in there. I made some modifications. This is the, if you look up here at the top, you'll see that, let's see, I need to get my arrow. The blue line represents the relative strength compared to the S&P. So this is the index. This blue line's going down. This tells me that the NASDAQ Composite is weaker than the S&P. If this were going up, if this were going up, it tells us that the NASDAQ Composite at this point was stronger. But while it's here in this consolidation mode, right here, it is weaker because the S&P is going up. Well, this is just sitting here and doing nothing. Okay, I'm going to move down to the next one. This is new highs versus new lows. This is a chart where I have the fan. This is the 200, 100, 50, and the 18. This is still in a downtrend, as you can see, for the NASDAQ. Here's the new highs versus the new lows. They're not much differentiation between the two. When you see a lot of selling pressure, you're going to see red spikes like this. Nothing like that is happening. The market is just kind of looking for direction. Now moving down to the next chart, number 3. This is the advanced decline line for the NASDAQ Composite. You can see during this period when the market was going down sharply, the AD line was going down, but it's just neutral right now. I mean, you can see in the short period there are more advancers than decliners while this is consolidating. Now I'm going to go to the NYSE, and I'm going to click on these NYSE charts. Here's the internals on the NYSE. Look at this index. Look how strong it is going up. And this information down here is the same as the information that's on the NASDAQ. I don't have all of the same information in this box as I do for the NASDAQ because this is not my primary index for analysis. Now, I may fix that and make them identical, but it's just different right now. So, once again, if I bring this up, scroll down here, make sure I'm clicked on the last day, I get the information. Now, advancing stocks here, 1259 to 676, 2 to 1. So you can see it's stronger here. That's represented down here. Here's the advancing versus declining volume, new highs versus new lows, and the ARMS index. Now on the next chart that I put in here, let me bring that quick pick back up. Now this is compared to the S&P. Now notice that the NYSE is moving up faster than the S&P is. Now, if I drop the S&P in here, notice that the line disappears because there is no comparison. This is set up for the NYSE Composite. But let me bring that back in the S&P 500 and look at this index compared to the NASDAQ. You can see that it's a lot stronger. So when I go back to that right here, the NASDAQ compared to the S&P, nothing's going to show up. You see the blue line down here. It's hard to see, but it is equal to the S&P 500, so no line appears. So what's this telling us? It's telling us that a broader market like the NYSE, if I go to that comparing to the S&P, it's the broader market looks pretty good if I limit myself to NYSE components. Okay, I'm going to minimize this, and let me do something else here. I'm going to click on the ranking module. This brings up the ranking module, and I'm going to go in and change this to comparative to the SPX, and let's just make this a 4-week comparison. And the SOX is, over the last 4 weeks, the SOX semiconductor index has outperformed the S&P by 9%, transports by almost 3%, utilities by 2%, and so on. But I want to compare the NYSE to the S&P, and you can see that it's outperformed it by nearly 2%. 100 is the base. You can see this right across here. So this shows me the S&P has outperformed. Now let's locate the NASDAQ Composite, and you can see that it's underperformed by 2.2% and so on. And that's what we're seeing with the blue line on the NASDAQ. It has been underperforming. Let me go back to that quickly. I have to get to the NASDAQ. Whoops, wrong one. And then bring that quick pick back up. So this is going down while the NASDAQ is holding steady. Its comparison to the S&P is going down, and you'll see that here in the relative strength module. Okay, now I'm going to do something else. I'm going to select a different chart here. I'm going to go down to my contextual, what I call my contextual charts, so we can see the relationship to the moving averages and so on. The 3 is above the 6 on the NASDAQ Composite, and the 6 is above the 18. That information's right here. But you can see the longer term, or the intermediate term, with the 18 versus the 50, it's still negative. But I want to go into, I'm in my market analysis users groups folder, and I'm going to go down here to major indexes, industries, and sectors. I put them all in a folder. One of the main strengths of HGSI, or one of the many strengths I should say, is building indexes. Now remember, these indexes are built with a minimum price of $5. I'm doing it for 104 weeks. And this view, I'm going to go to my HGS index analysis. The percentage price change right here shows me the percentage price change as of Friday. This was for 1 day. This is from last Monday. And this is a comparison to a week ago, Friday. So this is a utility index. I'm going to bring this up, and I'm going to go to a weekly chart. Get out of here and go back down to my contextual charts. Let's look at the weekly chart. And I want to point something out here. Because this is a holiday shortened week, we didn't have any trading Thursday. This number for 5 days represents going back to Thursday rather than Friday, since we missed a trading day. So don't be misled by this one. If normally this percentage price change 5 days is from Friday to Friday on the weekend, and that's why I put the column in. So for the week, the utilities were up 1.9%, which would represent over here going from the opening price to the closing price. But just pointing this out, on a shortened week, notice that all of these indexes are up. On a 1 day basis, let's see, 12 of them were up. So comparing that to the beginning of the week, it was a decent week, even though there is a lot of negativity out there, and most people are expecting this market to collapse, or from what I've read anyway. I just don't see it yet, but let's take a look at this. Since I was talking about the S&P 500, let's use the S&P 500, and I'm going to click on this. I have these HGSI index charts, which are just for analyzing the indexes, and I'm going to go down here to number 5, and looking at this, if I bring the information up and make sure that I'm clicking on the latest date, you can see that that's Friday the 25th, and these numbers tell me the percentage of the index that's above the 20-day, the 30-day, the 50, and the 200. And you can see that this market looks pretty strong based upon the percentage of stocks in the S&P 500 that are above these moving averages. That's going up nicely. It doesn't look like a weak market to me. So I'm in the S&P 500 index, and these are the numbers. Now you can do this on any index. Let's just look at the S&P 1500, a broader look. You can see this is flat here, flat here, flat here, but well above the moving averages. So I do not see a lot of weakness yet. Let's go to one more chart here using the S&P 1500. A broad look at the market. This chart tells me when the market is favorable here to entering. And let me get my arrow here. The dark green, all the conditions are met when the volume's at least, the advances versus the decliners are at least 5 to 1. It'll be dark green. Same thing for the volume. The force index 13 and 2-day, which is today's close minus yesterday's close times today's volume over 13 days and 2 days. So both force indexes are positive right here. And then the volume point of control 10 period turned positive, and that generates a dark green line, which is a buy signal according to the way I've set this up. When you have the light green bars, that's 3 to 1, 3 to 1, less than 5 to 1, but a 3 to 1, so another buy there. And then just a couple of days ago, the requirements were met again. Okay, and looking over here in this box, this is the last day. The trends are all up. 2 to 1 advancers over decliners. The volume, of course, was very light. But once again, I do not see a lot of weakness yet in this market. In fact, I see a lot more strength than weakness. Now, this is just my opinion, and you know what market opinions are worth, but I'm observing. I'm just not basing it really just on my opinion, but I'm basing this report on my observations. I'm going to leave it at that. I don't want this report to get too long. I just want to show you a few of the things you can do with HGSI where you can really delve into the market. Now, after the first year, I may do a webinar series where I really get into this, but I don't want to take any more time right now. Thank you for listening. I hope you had a good holiday week.